Ah, okay, okay. Thank you, Katerina. Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. This is me, myself, Alberto Alvarado. If you haven't subscribed to my YouTube channel, I strongly suggest you to do so. In YouTube, you type in the search box iiivb Stream Room channel, as it is in here. This shall show up. You click subscribe. Today is Tuesday, January 31st, 2017, and yeah, as Katerina said yesterday, this is the last day of the trial month of the year. So if you don't like how the year is performing so far, you can go to customer service and ask for a refund for the time. Okay, I haven't found that customer support window anywhere, but if somebody finds it, just let me know, please. I need to make some. I have some complaints for this trial. So, guys and girls, I would like again to now publicly thank Karina, of course, as always, for hosting all the guests around. RacerX, David, thanks. Rokas from Lithuania, AK10 for being around. Yeah, mate. RacerX. Well, today is going to be a very slow-paced webinar. I'm not going to talk about any potential trade opportunity. I'm just going to review quickly the ending result of the trading contest. As you can imagine, I am very, very tired now. This Donald Trump psycho price action's been killing me lately. So, yeah, I just wanted to record this. Apparently, as you can see here, the trader contest. Here's my name. I am ending in the 13th position. If I'm not wrong, unless we have something very outstanding from the people below me, I should stay in the lucky 13th position, or even higher. In any case, Dukascopy adjustment happened, because remember that Dukascopy responsibly review all the results before letting know people who's the first place, second, whatever. In any case, that find some dishonest behavior, etc., etc. You know that I am looking for two specific traders. Their equity curves are really closely related, so I'm interested in knowing if it's only my imagination, or that maybe there's something strange there. But we need to wait for the final Dukascopy decision, and it usually takes like 18 days to deliver the official results. So that's going to be like 3/4 of the next trader contest. So it's good just to give you an idea of my final standings. And RacerX, also known as David, thanks mate for the congrats. Yeah, it's the first time I believe in I believe I have 2 years delivering webinars for Dukascopy. And I believe it's the first time I take this contest seriously. I was excusing myself, saying that I was focusing on my live accounts, and it was true. But yeah, this year, in my New Year wish list was to take this contest seriously and to use it to as an educational tool here in my webinars. And apparently, this first month, I cannot complain. I am very happy of my performance. I haven't seen my name in the top 20 ever in Dukascopy. So, but the what it's behind the logic, why I decided to focus and to adapt even my live trading habits to make it compatible with the trading contest, is to use it as an educational tool. It is very important that we, because I was wondering during this how many weeks, Karina, I took off like 4 weeks, right? Like one whole month, I believe. I was wondering, like, okay, if I was like I was 11 years ago, but if I was in that stage now, even if you find somebody telling you important information during a webinar, and maybe you could grasp it, that maybe this guy is really know what he's talking about, it's very different from seeing real results verifiable by not only me, you, but everybody, even Dukascopy. So that changes and gives an extra dimension on the credibility, and that people could maybe log in and with a more open-minded approach could absorb some information here with less fear that maybe how sure I am that maybe I will lend my ears to this person and maybe at the end it's a complete fraud, maybe I would lose my time or be misled or mislearning something. But I hope that this kind of evidence could help traders to know that not necessarily they need to agree with me overall when I talk about politics and trash on politicians, etc. Of course, that's extra. But at least in trading related stuff, to have some hard evidence. And I believe this is the best one. Because of course, it's not in my best interest to open my live accounts here publicly, right? That would be like nonsense. But well, here these competitions are open to the public. So yeah, I feel very nice of receiving this 13th position. Thanks for the congrats, David. And well, I always insist before closing this window that this is me because I mean you can go to the trading contest and see my name on the 13th position. But well, just for the records, for the ones that are watching the video recorded through the Dukascopy YouTube channel, that this is me myself. Apparently I ended in 13th place. I was checking some stats that I will let you know in some minutes. Well, I believe that this will stay this way. Okay, this is the overall standings. From the 1st to the 13th, lucky 13th. I am here with the maximum drawdown, percentage 54, $581,000. That means 481% in profit. If I can be honest, I haven't seen this kind of performance for a long time because, of course, my live accounts I use a more conservative approach. But it's good to see that it is possible because not necessarily you can expect to do this every month in live accounts. I strongly wouldn't recommend to do that unless you really have a super extra risky account. And maybe you can run this kind of risks. And as you can see here, at some moment I was losing 54% of my initial balance. So you really need to be very sure of what you're doing. Because seeing your account at half of its value, of course, has psychological impact. So you need to be use a very high risk capital to do this kind of stuff. So the subscribers at least registered here 0, live 0. My order quality points 50 point. That means that all my orders were open and closed through limit orders, not market orders. And so far my same trader blog post 4. I hope that community support could check out the other posts that I've been doing in these weeks to help me with this number. So this is why I don't know if my position will stay here, because along with me some other traders have been liked the blog posts lately, so that could change the final positions. For example, if you see here we have 2 traders that I don't think that they started posting in the trader contest if they haven't done so since the beginning. So if you can see, if I receive 3 or 4 or even 5 likes from the community support, if you sum up that to this, that would be, I would get to the 212 points or even 13. So that would put me in the 11th position If some of these traders have a bad trade, they could give way to this move to allow me to move higher. Of course, the risks are that I could go lower. In any case, somebody below me makes an outstanding final day, and then I could drop to the 14, 15. But I said very difficult to drop below 15 position. And I believe this is pretty much everything. These two guys are from India. I really don't think at some moment I believed that the 1, 2, 3 was going to be done by India, but no, the Russian came to this Russian bear came to break that 1, 2, 3. So let's wait for the final results through Dukascopy. Here is my equity curve. It hasn't changed these last 2 days. Maximum drawdown again 54%. This month's profit $481,000, 481% in profitability this month. Demo subscribers 23, even though in the final positions this 23 didn't copy it, I believe 80% of my trades. That is why we don't have anybody registered there. But I am actually 23 people are following me now. So I expect that maybe next month I could at least have 1 or 2 demo subscribers actually registered that could be factored in my final points. So you can see here is my equity curve. This is my 54% drawdown, and well, how it ended up being. You can check some webinars before when I was talking about the real how you deal with this stuff is that you keep with your plan, and eventually at times it's very natural that you at the beginning you end up losing. That is part of the game, but part of the winning this game is to be able to stay in the game. The typical motto that says be sure to be able to trade another day, not to wipe out all your account in one trade or 2 trades. So yeah, I kept that approach and I let some good trades run here, and then I started moving and following closely the Mexican peso, the one that generated the best opportunities, I could say, worldwide during this last month. So this is why we need to keep an eye on the fundamentals, on the recent news, because that could bring us a lot of opportunities. A lot of traders don't even watch the Mexican peso. Most of them in the trading competition don't watch the Mexican peso, and even though I started 1 week after trading, 1 week after I started trading the competition when I came back from my vacations. It was, if I'm not wrong, was January 9th. Yes, January 9th. So the competition was on for a week when I took it. So even though I make this a very nice equity curve, but overall, because I was of course very aware of the most plausible and potentially profitable asset for this month, that is a Mexican peso. So you need to be always be aware of that, and to know a little bit of exotics, because the Turkish lira made some very good movements also this month. And when we had this attempt of coup in Turkey some months ago, of course it was one of the best tradable assets. Of course, when you're trading exotics, usually the spreads and even the trading hours and at times the leverage changes. But since the Mexican peso, it's exotic, it's very liquid in comparison to other exotics. It's actually the best exotic to trade, because it is the only one in the exotics that really moves freely. I'm not sure if the South African rand moves 100% freely, but not even the Brazilian real moves completely freely. So the Mexican peso, it's a good choice if you want to take a look at it. We're going to have tons of opportunities in the Mexican peso for the next, I believe, year. It's not going to be clear anymore what direction, because as we commented that in other webinars since the very inauguration day for Donald Trump, the resistance is coming from the very inside of the system. So it's going to be very difficult from now on that this guy really move forward all the ideas and actually happening that easily. So that will cool down a little bit the Mexican peso volatility, but of course it's going to be the worst or the best performing currency in the next months. So just to check it out, in any case you're not following it, get familiar to it because the spreads at Asian sessions are huge. But basically, I believe that even at this time, 1 or 2 hours before London opening, it has pretty much the average spread. That is more or less 50 pip, 60 pip, etc. So check it out. These are the real important numbers, the real ones that really count for. When you read this kind of data, you really know when somebody really knows what's doing or not, if it's being lucky or not. My total pip point gain is 1001. Okay, so if I'm not wrong, that means that in fact my overall all my performances measured by pips is like if I have opened an euro-dollar trade with 1000 and of profit, pips of profit. The average pip point outcome from all positions is 27. So the average of all my positions is like if I have an average of 27 pip each trade opened. So this gives you an idea that even I've been explaining why not even watching the it's pretty illegal, and you can make wonderful things with your account having a 50% risk reward thing, and maybe these two, the positive and negative positions, it's very close to the 1.5 to 1 reward to risk. So it's not necessary that you're always following the home runs. We were talking about that yesterday, that for the way the trading contest is configured, you cannot be expecting those huge home runs. And this is reflected here. I mean, grabbing an average of 27 pips per position, it's even less than half of the euro-dollar daily range average. So becoming a successful and profitable trader is not what you find in some forums saying that you need to go to the 1 to 10 risk reward or always being 80% of positive trades and all the trades need to be 50 pip. No, that's not true. I mean, if you can do that, be my guest and do it. But this is actual real thing, real data. And if you do this, you're able to make a wonderful job in your month. The most profitable trade in euro-dollar pip value is this one, 224. This was a dollar Mexican trade. So imagine this could be like a home run, right? But if you can see here, this is my most profitable trade. But even though the average is 27, so yeah, this is good, of course. But yeah, it in average is at 27 per trade. The worst trade was minus 112 pip. I believe this was in the euro Canadian dollar. I believe, I don't remember right. But as you can see, it's 112 at that moment. That was the daily average. So when you don't have an idea where to put your stop loss, let's put it simple. Use your daily range. If the average daily range is 100 pip, use 100 pip. There shouldn't be any need of using a higher one if you're trading at least in this kind of a style. Even using 100 pip is way too much. For very specific circumstances that honestly I don't remember exactly now, I use this. I don't remember exactly, but well, you can see that here was a big one. The average pip point gain on positive positions is 76, and the average pip point loss on negative positions is 53. So at some moment, if you put the average pip point gain in positive positions and negative, you could read this as the real risk-reward thing. So my risk was an average in losing positions 53, and the reward in 76. So that it is more or less 1.5 reward towards 1 to risk. You don't need to go to the 1.3, 1.4. You already know that I love the style of opening a trade, at least initially, to the 1-to-1 more or less risk reward. I believe that it makes sense just to open a trade that way, and accordingly to the next hour price action, you start reducing your risk, or etc. Not augmenting your risk, but reducing it. So maybe after 1 or 2 days, you could, if you move, for example, if it could be possible in the trading competition, but you can do it in the live accounts or in other demo accounts. At some point, you can have an unlimited reward versus no risk at all. So yeah, you can start 1-to-1 and 1 day after switch it to an infinite potential profit and no risk at all. So if you can do that consistently, who cares if you start trading 1-to-1, opening 1-to-1 trades? If you really want to wait to the 1-to-3, 1-to-4 at the very beginning, I wish you luck, because that is hell difficult to do. Why? Not because it's a lack of a skill, it's because the market structure. The market structure is not done that way. Because if those kind of opportunities were common, everybody would be profiting from that every time. So the same market structure that tends to the equilibrium, even if you see the markets moving, it's a dynamic equilibrium. It tends to move into the 1-to-1 zone point. So it's a very good approach to start with a 1-to-1 and then move it in your favor. And this is indirectly reflected here. Number of trades, 37. I'm sorry, I guess I misexplained this. This 1001 pip point gains is not euro dollar. I guess I said euro dollar. No, this should be considered. Let me check, because now I am confused. It is simply it's too much and something's not making sense. So let me check quickly in the profile. It says total pip gains, pip point gains, the number of pip points in euro dollar pips scored during the given statistical period. Well, yeah, it's like if I had earned 1001 euro dollar pips. So imagine that. And this is because I was watching the most volatile instrument during this month. So it's good. Again, it's good that you keep an eye on fundamentals, so you can, if you find a good opportunity in the best tradable asset, well, just go for it. Okay. So, well, my average position, and this is very important, is 3,300,000. The average position size, the maximum position size in the trading contest is 5 million. This means that not every trade that I opened was the maximum. Overall, at the beginning, I tend to diversify, and instead of distributing at the very beginning, you can open 2 trades of 5 million, more or less. But why do that if you can diversify that among 5 trades? Okay, maybe 2 million each, and you will end up opening 10 million position, and it's not necessary that you open those 5 lots. Maybe at the beginning you open 2. So you start moving gradually. And this is another, at least this works for me in live accounts, of course, also. You need to be able to put your limits and to creatively and mathematically and smartly administrate those limits. Again, you're opening the same potential $10 million position, but diversified in 5 trades. It's very difficult that you will find that you can open 5 trades at one moment, because it's very hard to follow 5 trades, analyze 5 assets for this, at least this kind of trading contest configuration. Maybe I believe that the most I have at some moment was 3 positions, the most. So yeah, you don't need to go always for the home runs. Average trade lifespan 22 pips. There are 22 hours. That means the average position was open for a day, and this needs to be in tandem with this. If you have here, let's say 24 hours, and you have average bid points of 10 pips, you're doing something wrong. Means that you are keeping trades way too much time open just for receiving a reward of 10 pips. Like yesterday I was explaining my latest Mexican peso trade, that according to the risks I was running when I left open the trade during the weekend, and the reward of only 22 pip yesterday, it was a very bad trade. Even though it's in the average, well, not the average, but here it's like in the average, 20, 22, 23, here is 27. But I had that trade open during the whole weekend, even though the weekend is not counted as days, but you're running a lot of risks during the weekend. So even if you have a winning trade, that counts. Okay, so you have to keep an eye on that. The maximum drawdown, 54%, average drawdown, 1493, the number of drawdowns, 5. I really don't tend to look a lot in this, but the average drawdown, of course, at some moment it was 25%, and according to how I was, my performance, this was being reduced every time. So at the end, my average drawdown was 15% of my overall account. So that goes in tandem and in congruence with my lot sizing, etc. Okay, this is at least for having some serious chances of winning something in the competition. You should try your best to do this 100% off conditional orders when you open a trade here. That means opening limit or stop orders, and when you need to get out of the trade beforehand, to use it with limit orders, not with market orders. Loss ratio, this is the magic number, 62%. As you can see, everything goes in tandem. You don't need to have here the 70-80. Of course, if you go to the first places, I believe the first place is 80%. Of course, you can do that, go for it. But the thing is that it is not necessarily a must that you have 80% to actually have good results. I mean, those guys had like 1,000% in profit. I had the half of that. But even that have that 600%, 500% of profit is very good enough. And I got to that point with 62%, so it can be done. Don't get obsessed with, because this was a mistake I made personally during a lot of years. I was looking for the 80%. I never found a way. I mean, consistently, I never found it. I got lucky some weeks, some trades, some streaks, and yes, but eventually this tend to go to the 50% in the long term. So I believe that it's pretty much for the account. And I just want to review some trades that I posted in the traders blog, just to show you how when you make one of the advantages of using Dukascopy platform is that you have this widget that detects automatically Chartist patterns like descending triangles, channels, etc. The power of that tool that you receive for free in Dukascopy. At some moment, some people ignore that this tool can be acquired for free, and even some people pay for this. And usually it's not cheap. And even though maybe the paid services offer you something extra, you can actually make very good trades using this tool, so use it. Dukascopy really makes an effort approaching good tools to traders. Look at this. I believe that I posted this on Friday, I believe, or something, or on Monday. I don't know. But you can see these trend lines, I drew them. The market was like in here when the trading platform detected this descending wedge. So look at this. Look at this. to the pip. So respecting and following Chartist patterns will never ever tell you to buy or sell. But if you learn to use that in your favor using your edge, your technicals, your fundamentals, you actually have a very clear idea where the market could be turning. For example, in some webinars, I explained how I used I believe it was a double top in the Mexican peso or in the pound, I believe, in cable. And I was explaining when I trade that way, betting that that double top will fail, you put simply your stop loss below the neckline. Okay. And this is the same thing. If you really use these Chartist patterns, this gives you an idea where's a logic way to put your stop loss and not randomly, because at times people just use, okay, the daily average range is 150 pip, I put that. No, it's you can be more precise, more sophisticated in the way that you use and you put a stop loss. So for example here, if the market hadn't gone to this point, to the pip respected, maybe if you bet to the downside, maybe putting your stop loss, I don't know, maybe here, some pips above, it would have been more than good enough. So always use Chartist tools. In Dukascopy are for free. You just click on the widget thing and it will scan the Chartist patterns and you use it as a tool. Okay, but I wanted to show you this. When the computer detected this descending wedge, the market was here. So the markets and a lot of people were looking at this as, I mean, I don't need to explain anything. Look at this. It was to the pip. When you have high quality Chartist patterns, it's the same thing as the self-fulfilling prophecy of technical analysis. Technical analysis work only when people make it work because they tend to act reading that same information. It's not that easy because technical analysis will never ever be the one that tells you the real price action. Okay, but in this case, a lot of people were watching this line. Look at this. This was the ultimate support zone in Mexican peso, the 28, if you remember that I've been commenting that zone. But even though the market made this extra movement to the downside and then stabilized. And this is for a reason. In Nation session, I posted this in the blog on dollar weakness. I was explaining that I believe that this has to do a lot with Carlos Slim press conference on Friday. I commented that one of the most interesting things to trade with that gap was precisely the dollar versus the Japanese yen. Because this triangle was, as you can see, this is the triangle, it was broken to the downside. When we reviewed this yesterday, I believe, I was saying that, yeah, the markets could try to close the gap, but according to the configuration of the triangle here, that could be very difficult, and look exactly what happened after. I was commenting that the intraday support and resistances were here, the 115.25, and here the psychological 114. And yeah, this again, never ever take for granted that a gap is closed every time, because that is not true. If you had bet here, for example, or here, that the gap was going to be closed no matter what, look how in the negative you would be. Trading, it's not something easy. The same way, you won't find commonly the 1 to 3, 1 to 4 risk reward, because that would simply put the risk out of the equation, and then the reward would have simply no sense. The market rewards the risk, and at least at some moments an acceptable risk is 50%. I mean, you can 50%, let's say 25 take profit target versus 25 stop loss. That is like the most typical. If not, the risk is reduced so much that then the market would become inefficient. because everybody would be taking only one side of the trade. And that's precisely what the markets are not for. Okay. So, well, again, if you detect correctly a Chartist pattern, you can even use them as reference even days after, like the one the Mexican peso just showed you. Here maybe, well, I don't know what other kind of patterns we could see now, but at least now, as you can see, the market continued respecting this breakout to the downside, okay? So, well, that's for that. And the latest one, I like this very much because of I was commenting that cable after having the Supreme Court ruling that the Parliament need to approve the Brexit. Something my overall bias on the pound changed because I am expecting it sooner or later some kind of weakness in the pound, because after the Prime Minister May dissipated doubts that Brexit, yes, will happen, it's going to be a hard one, the markets reacted very positively to that. And then having the Supreme Court ruling that out and seeing the price action is kind of sending, at least for me, mixed signals, like confusing signals. So I was saying at that post, at that time, you can check it out in the traders blog. When I opened this, I posted this, it was when the market was touching here. So I was saying that it was breaking here, sorry. So I was commenting that there were still bullish reasons to believe that using the Prime Minister May bullish sentiment, there are a lot of traders wanting to have that gap after Brexit, after that weekend Brexit at 137 that was not able to be closed so far, and what it was 6 months from now. So yeah, again with this issue of the gaps, don't ever think that closing a gap is a no-brainer, because here in the cable we have that gap not being able to be fulfilled for 6 months, and that gap to be fulfilled needs to get to the 137. So trading a gap is like any other kind of trade. It has nothing of something in your favor. No, that is not real. That is not true. Okay, so I was commenting here that in my logic, having the Supreme Court saying what it said, contradicting what Prime Minister said, I was expecting at least that the cable should show some bearishness at some point, maybe to move between the 126 and the 120. So I started seeing here like the first signals that could happen. I commented in this blog post that you could see maybe the markets profiting from that latest bullish movement to make it maybe even to try to close at 137 gap. But there was nothing for sure. So look what happened after. This is the 4-hour chart. So this was not noise. The market actually tried to respect this to the upside, and then moving down. So it's completely broken. Of course, well, I don't know. At this moment, I'm not following this cable since some days. So I wouldn't say that this is the beginning of a breakout further to the, I don't know, maybe the 122 or something. No, I really don't know. But the thing is that, again, using the Chartist patterns, basic, I mean, you don't need to really be obsessed with knowing every single chart pattern in the lowest time frames and knowing all the candlesticks configuration. No, just the basics, but being able to detect them correctly. You have a tremendous help with this automatic widget in Dukascopy. Okay. Because look, this shows you and verifies the quality of a chart pattern, of a Chartist pattern. This kind of things that you can, days after, you can actually see those charts being respected, even after having a lot of days after. So this is good, because you can actually draw a complete trading plan upon Chartist patterns. My idea is to make it more global, not using all the Chartist patterns, but yeah. And again, having a breakout, usually it doesn't necessarily mean that you will have immediately a breakout, because the markets love to do this, to break and then try to jump above. Actually, look, this was, if I'm not wrong, this is the weekend gap. The weekend gap tried to put the price to start jumping on this lower line, but it simply kept the steam and just broke. But again, now the market looked like it stabilized here. So these are only tools. Neither the technical analysis, neither the candlestick patterns, neither the Chartist patterns, neither harmonics, neither Fibonacci's, nothing of that will tell you what to do. That's a skill that you need to develop. A feeling, intuition, whatever you want to call it, but something that you need to develop and use this as confirmation. For example, here I was commenting, if you want to go bullish, you need to consider that the fundamental risks are against you. So the shortest stop loss you use, the better. If you're trading to the downside, you have the fundamentals in your favor, so maybe you could have a wider stop loss, because you know that you could have some hesitation, but at the end, the fundamentals should rule how and shape finally how a trade goes. Okay, so here, using the Chartist pattern, if you saw the breakout here, maybe you waited for the pound to retest this line, and then you know that the stop loss, if you were a bull, should be here. And if you were betting maybe to the downside, well, you have you could have shorted here or here, and you know exactly that the stop loss should be at least here. I have some theories on how to trade this, and I haven't read this anywhere. But at times when you have this kind of stuff, I don't like to use, for example, if I had shorted here, I maybe at this moment I wouldn't have used this stop loss, but instead of that, following this line, using the top, the highest after the breakout, the highest point, you join it to the highest here, and this should be the stop loss. Of course, you see it's a huge stop loss. But when you're trading in the direction of the fundamentals, that should work. Or at least that doesn't mean that you will sit down and pray for this stop loss not to be hit. Of course, if you see the price action jumping convincingly above, maybe at the first time that you see that the market will retest this line, you simply get out of the trade. A stop loss is just a seat belt. You use your seat belt when you drive a car, when you're in a car, of course not wishing to that seat belt to be used to function for the reason that it has been built, that it was invented. Of course, you're not driving wishing to crash your car, okay? But in any case an accident happens, you know you have your seatbelt. This is the same idea. In any case, you go to the bathroom and something happens, and boom, the market just moves. You know exactly where's your maximum risk, but it's a theoretical one. Actually, in my opinion, when you have this kind of stop losses in the direction of the fundamentals, if you're using a stop loss not in the direction of the fundamentals, like assuming that you decide to go long here and you put your stop loss here, of course you can expect and you can allow the stop loss to be taken out. But when you're trading in the direction of the fundamentals, the market usually will start sending you earlier signals that maybe they are just willing to revert a little bit the fundamental direction beforehand, like 2 days before, 1 day before, with the price action. So yeah, having a stop loss here, you could have maybe 2 days after, after you open the trade, the market sending you clear signals. If it's stabilized here and maybe went down, maybe that wouldn't be a good idea just to respect this stop loss. Maybe to shrink it dramatically or even close the trade. So the bottom line is the stop loss in the direction of the fundamental trade usually theoretically shouldn't be taken out most part of the times because the markets will allow you, if you put your stop loss in a correct place, the market will allow you to take out your trade in minimizing the losses before the stop loss is hit. Again, trading in the fundamental direction, don't sit and pray for the stop loss not to be touched. It works in the inverse when you're trading against the fundamentals. You can simply let your stop loss to be taken out, but you need to be very conservative, like in here. Okay. I mean, if you were bullish here, that at this moment the fundamentals, the latest news shouldn't be supporting a bullish view, and using a stop loss here, it would make no sense at all. Okay? So, well, I believe it's time to call it for a webinar. I thought this was going to be a short one, but yeah, it's a short one because my average is 1 hour and a half. So, yeah, having a 1 hour webinar, it's like the shortest webinar ever. I would like to thank everybody for your support during this trading competition, for following closely the results, to following closely my explanation of the trades, of my opinions on the markets, on Donald Trump effect on the markets, etc. Of course, to thank Karina for her support always, for recording, for assisting, for questioning, for everything, and of course for all you guys and girls being aware. David, RacerX, Rocas. Yesterday was Sharp Sense here. So all of you, I hope that you in some way profited from the success of this 13th position this month, and that we continue doing that and learning all together. The market circumstances will most certainly stay unstable and uncertain for quite a long time now, maybe with less volatility but uncertain. So maybe we could learn together and to make this a profitable year at the end of the year, regardless of this initial uncertainty. So thanks you, David, for being around. It's my pleasure to believe, to feel that I am helping in some way or another to help other traders to develop their own approach to the markets. Katerina, thanks to you for hosting, as always, for recording, your support. On Rocas, thanks for dropping by. Yes, David, go sleep. I need to sleep also, so go to sleep. Have a nice one. And all the guests, of course, are kind of shy, quiet, but thanks for listening. I hope that this next competition, maybe I won't start trading during this week. I will start next week just to have some days off. But well, if I find something interesting, of course I will open my trades in the trading contest. So I believe now it's time to call it a webinar. So again, remember that I expect you tomorrow at the same time, same place, the first day of February, the second month of the year. Remember that this is Alberto Alvarado. Remember to trade safe, be safe, and bye-bye.